welcome back. Well, the stock to focus on this morning would be TCS. That of course came out with numbers. Now the numbers have missed estimates, but the outlook is positive. So it will be interesting to see how the market reacts to it. Also considering that the stock is very close to an all-time high. Sandip Agarwal of Edelweiss is now joining in. Sandip, good morning. So what do you think market should look at? Because the stock's almost at an all-time high. Earnings was a miss, but that's backward looking. The outlook is positive. Your thoughts?
So yes, the numbers have a big miss, versus our expectation on revenue growth front and margin front both. But the outlook is much more encouraging and exciting than what we have anticipated. So we were expecting a zero growth kind of number in Q2, and I don't think that that is challenged at all. In fact, that there is a positive bias towards that. Secondly, we have to also keep in mind that there are a lot of work which they already said on the call where you have supply side constraint because client doesn't allow you to work from home on those projects. So there is an impact of that as well. And third, if you see the most important thing, the zero touch expenditure which is coming from the enterprises and the core infrastructure transformation and the digital transformation, I think these are big themes, and it is basically a big theme because of the online activity going up led by the pandemic. So I think we have to take a little long-term view. In medium term, there could be some pressure because stock, as you rightly said, stock is at all-time high, near to all-time high. But I think if you take a medium to long-term perspective, it is a good theme. The technology spends will definitely go up across the world, and with TCS, which is a market leader and very strong and trained workforce in digital, they should be big beneficiary. Similarly, Infosys and HCL will also be big beneficiary.
Okay, Sandip, I mean, however we looked at the EPS numbers itself, just now we had Ramki telling Rima that in the revenue in Q4 is going to be flat, but their margins will come back to the Q4 of FY20. How do you look at the EPS in that case?
So that's why I'm saying the whatever miss we have seen in the current quarter, I think that is the overall miss which you should expect in overall FY21 number, because the statement on margin is very encouraging, basically, which means that the margins are coming back very strongly. So you will not see a cut on EPS versus what was anticipated earlier. There could be a 50-70
So what is your number is what I'm asking?
84 rupees is my number for FY21 and 96 is for FY22.
Okay, and what did you say about valuations? Are you ready to give them higher valuations because the rest of the market of course is seriously impacted by COVID, so in comparison are they due for better valuations?
So see, we have already upgraded the multiples and the earnings very significantly just 1 month back on 8th of June, and we upgraded TCS from a hold to buy, and we assigned a 24 multiple. Now 24 multiple is not a cheap multiple, but yes, we are valuing it at FY22, but probably the whole of momentum of these three things, which are the secular trend on online activity, if it plays out, the years ahead, 23, 24 will be much stronger, and I think investor will take that into account, and they probably won't mind upfronting the multiple even little higher.
Okay, so you're saying the punchy valuations have good reason and maybe they can sustain. Sandip, morning. I guess TCS's commentary is raising the bar for its peer Infosys as well, right? Which of the two stocks do you prefer, and what's the kind of growth you're penciling in?
So see, from a return perspective, purely return perspective, we have a HCL take followed by Infosys and then TCS in our order, because there are two things which will grow very fast. One is the cloud IMS theme and the second is digital transformation. But in case of Infosys, obviously the margin levers are much higher than anyone else, so their EPS growth will be stronger than TCS. There is no denial about it, and they will keep on surprising on the margin front. That is what I believe. While on the growth front, they will be similar to TCS, means some quarters they will be 1 or 2% higher, some quarters they will be same. So Infosys doesn't have a significant edge over TCS in terms of revenue growth, maybe 2-3% higher because of the base. But on the margin front, they have a much significant edge on TCS, because TCS is already running at 100% efficiency in all parameters. So the scope for improvement of margin is limited to the pandemic loss. But for Infosys, there is a much more delta on margin. So, EPS growth for Infosys will be much stronger for next 2-3 years. So, from that perspective, Infosys should return much more, and it is also trading at discount.
That's most helpful, Sandip Agarwal. And with that, thank you very much. It's back to Rima. She has Rajesh Gopinathan and Mr.